So let's turn our conversation a bit and talk about the big story of the day, and that is Nvidia. I'm curious to get your thoughts. Just market at current valuations, you've got lots riding on this report. There certainly has been a lot of hype about what we are going to hear and see from Nvidia after the bell. How big of a bellwether is it for the market? And what does it ultimately mean here just in terms of the larger story, the more macro story that's playing out within the markets today?
So I've said this consistently that we own it, we like it, we like AI. Could it be overvalued? Could be in a crowded trade? Yes, we could be. But I want to just point out to people, if you're a long-term holder, you're going to benefit from these great companies like Nvidia. You know, if you took Amazon, go back 25 years, 10 periods of time down at least 20, one period of time down 80. The very famous Jeff Bezos letter in the year 2000 when he was writing about the demolition of his stock, but yet the improvement of fundamentals. Nvidia is growing and evolving. Could it have a short-term impact on the market here? No question. Do we own it? We own it. Are we staying in it? Yes. And you know, I just point out to people that are listening, there's a guy named Warren Buffett. He made a 70-year bet on America. Sometime in 1954, he decided, you know what, I'm getting long America. I'm getting long super high-quality companies. I'm going to take this ride with America. And I think people have to start thinking like that again. Nvidia is one of those names. I think if you hold it over the next decade, you're going to be very well rewarded.
I know a year ago we spoke and you said regarding the Fed from a macro perspective that they would declare victory around 4% inflation. We've seen them very much so not do that. They're sticking to that 2% goal. What do you think that does for risk assets, for the tech trade, including names like Nvidia? Okay,
so you're right. They are jawboning people and telling the people they're going to go to 2%. But when you really look at the data, I think they cut rates well before they get to those targets. And so I'm still in the 2, possibly 3 camp this year. Hopefully you guys will invite me back to either prove me right or wrong on that. But the reason I'm saying that is they have this debt bullet. They're staring down the barrel of a debt bullet. You don't want to get the U.S. in a situation where we're spending $1.5 to $2 trillion on interest payments. We're upside down right now. 27% of the GDP is in federal spending. 6 to 7% of it is in deficit spending. If alarm bells are not going off at the Fed, or if you're looking at the economic dashboard of the country and seeing this imbalance, this is wild deficit spending for a nation at full employment with these wage numbers.